The silver market was one of the hottest things over the last 12 to 24 months. We have seen the silver price coming from $25 up to $120. Now we're back at the $60 levels. And a lot of people are disappointed of silver. But honestly, if we look at silver projects out there, it's a value increase which is tremendous, because all the silver projects, development projects that we see nowadays, they started with like $20-25 of silver. They couldn't have dreamed of $60 silver, but here we are. And today I'm talking to Jonathan Battershill. He is the CEO of Silver Mines, and he is actually working at one of the largest undeveloped silver projects in Australia. I would even say it's one of the most significant undeveloped silver projects on the planet. And I'm happy to have him here. Joe, great to have you. Thanks for your time.
Thanks for having me on again, Jan. Look forward to having a chat.
I mean, I said it already in the introduction, if you like. Silver has become increasingly more important, both as precious metal, but also on the industrial side with all the solar panels and everything we see it's going on the planet. The silver price is booming. You must be a quite happy CEO, I guess.
I am. I'm not going to lie. Look, interestingly, I had a conversation with an investor quite recently who said to me, you must be very disappointed that the silver price has halved. And I said, well, it all depends on your perspective, because I look at it and I think how happy I am that the silver price has doubled. So back to your point, I mean, $120 an ounce was a crazy number, and I'm not saying it's not going to get there again, but it got there very quickly, and that's always a little bit of a concern with any commodity price when it rallies so hard. I think the fundamentals are incredibly supportive to see silver price continue to strengthen in the long term. And it's funny, I have these discussions with my wife. I own a lot of silver, and my wife, she asked me recently, she said, how much did you pay for your first ounce of silver? And I paid $4.50 an ounce for it, and that was in 2004. So I'm pretty happy with that return. And we've seen the silver price just go from bottom left to top right of the chart for 20 years, and I see no reason why that's going to change. So I think the backdrop for silver, both as an investor metal, but also it is the metal of innovation. Silver has more uses than any other commodity other than oil, and every time we see a change in the demand shift on a particular element of silver, like when it used to be in photography, and when that collapsed, when the world went to digital photography, everyone told me, oh my gosh, silver price is going to $5 again, it's going to stay there. Well, then solar came in. Solar is starting to plateau particularly in terms of Chinese demand. I think the direction of travel has already been set for the decarbonisation of the economy and electrification. So I think the rest of the world will pick up where China's sort of maybe reducing or slowing down their growth, as we've seen with everything else. But fundamentally, it is the most conductive metal known to man. If we're talking about electrification, silver's going to be there. So look, I sorry for the long-winded answer, Jan, but I'm very positive silver.
No, I would agree, Joe. And everybody's talking about AI and data center and is investing in the Magnificent Seven, even if they are not as magnificent anymore as they used to be. But everything of that need our metals, and especially your silver, hopefully in the future. But let's talk a little bit about the future. I mean, the future is now, as I like to say, because you released a new feasibility study. And I think that's one of the most important milestones a mining or development company can have, right? So from a CEO perspective, what are the most, let's say, significant points, and what is the biggest message the investors should get from your new feasibility study?
Yeah, thanks, Jan. Look, it's a great opportunity. I mean, I would define Bowdens with one word, really, and that's or one phrase, and that's world class. I mean, in terms of as silver developments go, you mentioned earlier it's one of the largest undeveloped silver projects in Australia. Well, it is the largest undeveloped silver project in Australia, and it's one of the largest undeveloped silver projects in the world. And when we look at other silver projects that are out there that have gone through studies and close to a development decision, really the closest comparable that we would see would be Abra Silver, which is obviously TSX listed. they have a fabulous project, Diablios down in Argentina. And look, I mean, I'm totally jealous. It's a great project. However, you know, they're looking at sort of a production profile which is double ours, so it's double the project. Capex is double. Operating cost base is very similar. We're a little bit more expensive, but they have 8 times our market cap. So that, we think there's a bit of a gap to close there. And we think this DFS goes a long way to helping close that. We've put out a reserve of 95 million ounces of silver, or close to 95 million ounces of silver, just under 100 million ounces of silver. It's a 26-year mine life. To give investors some confidence that we've not sort of tried to use a higher silver price to drive this. We used a silver price in our optimization of $35 an ounce. So we know that when we come to fund this, we're going to have to go to the debt markets. We're going to have to raise some equity. So we want to make sure that investors, both debt and equity investors, are very comfortable that they're going to get their money back, or equity investors are going to make some money. So I think it's really important to stress that, by using a $35 silver price, we saw the reserve go from around 70 million ounces to sort of 95 million ounces. And, the 70 million ounce reserve, we used $29 silver. So we only lifted the silver price by $6 an ounce. When we were running the studies on our pit to work out where we put infrastructure, we actually ran the pit shells at $50 and $100, just so we weren't putting infrastructure that might need to be moved down the track. If we'd have put $50 silver into our Whittle optimization, so our pit optimization, that mining inventory, I can't call it a reserve, it's a mining inventory, that would have been 127 million ounces, which would have been a 40-year mine life. There are very few other silver projects on this planet that can offer you that longevity with that scale of production. So we see this as a very, very important study. Capital's gone up from our optimization. I mean, it's gone up 30%. No surprises there, really. Mining inflation has been running in Australia, on Australian projects. Mining capex inflation has been running at between 10 and 15% per annum for the last 3 years. So it's 2 years since the last one. So that would have brought our capex up to about 400. There were a couple of scoping changes in the study. We needed a bit more infrastructure for our tailings disposal. So that's all in there. But the other thing I would preface it with is that we're building a mine here we know is going to be around for at least 25 years. So you want to build it properly. In terms of the numbers, look, they're very robust. I mean, the very, very strong financial metrics. All-in sustaining costs around $23 per ounce US, and that's over the 26 years. If we look at the first 10 years, that cost comes down to about $14-15 an ounce. So the first 10 years are which is generally when most people see the value from a payback perspective. Look, we're very, very happy with the numbers we've put out. Our base case pre-tax cash flow undiscounted is about just under $2 billion. If we put spot in, which our spot when we did this was $61, so it's a little bit higher now. The pre-tax cash flow was $3.6 billion. So there's a lot of value in the ground here, and hopefully we want to extract that as soon as possible.
Yeah, it's not just.
Sorry, Jan. One key message that I completely forgot there is that we have also we've optimized this project on silver. So it is a silver project with some minor zinc and lead. But in the first 5 years of this production profile, 95% of the revenue is silver.
Wow.
In the 26 years of the mine life, it's 91% of the revenue is silver. So I do have a bit of a bee in my bonnet about companies that sort of push themselves as silver projects when, in reality, if they've only got 40% of their revenue or 30% of their revenue from silver, I mean, that's a byproduct. We're trying to generate as much pure leverage for silver investors as possible here.
And I think that's very important. There are not so many pure silver mines out there. Most of that is a byproduct. So it's great to have another one, hopefully coming upstream quite soon. And I think besides the great numbers that you just outlined for the feasibility study, I think the flexibility is something which is really important here. As you just said, if the silver price goes higher, you can have and mine more silver. If it goes lower, well, you can optimize it and mine a little bit less. But the most important thing is it's flexible. And that's what you need, because you have all those risks if you want to bring up a new mine, and minimizing the risk and optimizing it for every situation you could potentially run into. I think that's very important, and you have that also in your study. But there's just one
We
thing
do, yeah.
basically holding us off, Joe, from getting it into production, and we have to talk about this. This is the concession. You got the concession a couple of years ago, and then you lost the concession again, and now you're trying to get it back. That was a little bit, let's say, fast forward for myself, but maybe you can just give us a little bit of a top-down perspective. Where are we at right now? We talked about the details in our last interview, but give us an idea, where are we at in this whole process with getting the concession back?
Yeah, look, yeah, and it's the elephant in the room. We talk about Australia being a lower risk environment or lower geopolitical risk environment than Mexico, Argentina, Peru, whatever. But fundamentally, we lost our consent through a court of appeal decision. So that always sort of creates an image perspective problem, right? So if I take a step back, when we were granted the consent back in or the concession back in 2023, there's a small group of local farmers who and associates that don't want us there, as with every mining project in the world. And they lodged what we call a judicial review of the decision, the government decision. And that was dismissed, and then they appealed it, and the appeal was upheld on what our lawyers have described as a very very technical point of planning law. And it's what's really important to stress to your investors is that at no point during the permitting process has there ever been an issue raised by the government or any of the consultants about the technical merits of this project, whether it be the metal suite. The action group have talked about lead, and lead's going to be a problem. Well, the lead isn't a problem. I mean, it's been demonstrated it won't be a problem. They've talked about, the farmers have talked about how we're going to take all the water. Well, we're not going to take all the water. I mean, again, that's all been dispelled by the studies and verified by government experts. So the appeal decision went against us, so we've had to deal with that. And fundamentally, it required, or our decision, which is now called the Bowdens precedent, it sort of turned planning regulations on their head for New South Wales, not just for us, but for all state significant developments, which included about $55 billion worth of renewable energy projects out the west of New South Wales. So the government realised that this was going to be a problem, so they changed the legislation to remove this issue for future sort of development proponents. And it wasn't changed to help us. It does help us, or it has helped us, but it wasn't done specifically for us. It was done for $55 billion worth of renewables projects. So that was changed in late 2024. So we thought we'd have the concession back in 2025. Now, unfortunately, 2025 proved to be a very frustrating year for both us and all the stakeholders, whether it be government, community that were sort of working to do the assessments for this project. We were sent down a couple of blind alleys, which proved to be and no one's fault, but they proved to be sort of not right. So everything we've done has been reviewed legally, and as we announced to the market in December last year, so 7 months ago, we agreed a navigable pathway through this permitting sort of delay with the government, and part of that required us to just update our ecology surveys, because there was concerns that because the original study was so long ago now that those studies were out of date. And so we said, yeah, absolutely. So we did. So we've done that. We submitted all of that information through to the government at the end of June. And so now all the information sits with the government, and now we're waiting for the government to do their assessment of the additional information we've provided them, and they will then pass it on to this group called the Independent Planning Commission, which is the final consenting authority. I would like to think that that information will be referred across to the IPC in the next few weeks. Definitive timeline, I can't say. I don't know, but hopefully in the next few weeks. And once it gets across to the Independent Planning Commission, they have a deadline of about 12 weeks to make that decision. So if everything goes according to plan, we could potentially have this consent back before the end of this calendar year. But as I say, it's a government process, so who knows? What we have done is, with the completion of the DFS, is we have positioned ourselves to be ready once the consent comes in. We've already commenced, the front end engineering design, and so we want to be in a position whereby, consent comes back. All the engineering studies for the front end engineering design are already underway, so that 2027 is a year when we can make that financial investment decision and actually crack on with this thing. So look, we're getting to the pointy end, put it that way.
No, that's very good to know. And I think from an investor point of view, right? I mean, full disclosure here, we have to do it by legal reasons in Germany. We own stocks of the company, and we also, Joe, work with you and the company in the German-speaking markets. As an investor, you want to get in early. You want to get in cheap, right? That's what the investors like. And if you would get back to concession, well, usually projects get a little bit more value, and that's usually shown in the stock price, right? So the good thing for the investors, or what you want to be, is to get in as early as possible and to get the full upside. So I'm not saying this is 100% the chance here. There might always be a problem with it, as I just outlined. It can be delayed or whatever. But in the end, it seems like you have a very robust project in a usually safe jurisdiction in Australia. We need more. The government will need more people to work, and you generate jobs. They will need more income, as we talked about it earlier. Australia wants to step away from the coal industry. Well, what's
next?
What's next, right? It could be a silver project. So I think that outlines opportunities for investors, and you should, as an investor, dig into the story and learn more about it. But now my question towards you, Joe. For an investor, what are the three main reasons to take a position?
Look, I have a very quick summary to say, and that is that we were fully permitted, or we had our development consent in 2024. It was taken away from us in 2024. When we lost our consent, the share price fell 50%. Mm-hmm. Since the share price fell 50%, the silver price has doubled, and we've released a DFS for almost 100 million ounces of silver in reserves with a 26-year mine life. Once the consent comes back, there is a significant chance of a positive re-rate in this stock. So that's my first point. My second point is, this is a genuinely world-class development that doesn't come with the same geopolitical risks as a Mexico and a Peru or Argentina. Now, I fundamentally don't have a problem with those countries, but some investors do, and if they want silver exposure, they don't want to take on that geopolitical risk. So we provide a really, really good vehicle for people that want that silver exposure with a slightly different geopolitical risk profile. And finally, look, it's all about silver leverage. We have engineered this project and we have optimized this project to give investors as much leverage to the silver price as possible. And with a 26-year mine life, over that 26 years, 91% of our revenue comes from silver under our price deck. That's an outstanding opportunity for people that want to get involved in the silver market.
Perfect. Joe, thank you so much to outlining everything, to talk about it very open, also in terms of the license and the concession. I'm really looking forward to see the development pathway of the company. I wish you the best of luck with getting the concession back as soon as possible. And let's see where the stock price goes once you have it back. Thank you very much for your time.
Thank you, Jan, and look forward to being on again.